Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have David Alton Clark on the line. He's a top financial blogger. David, how you doing this morning?
Doing great, Joel. How you doing?
We're doing good. Thanks for coming on here. Busy day in the markets, a surprise acquisition here. But let's just go back and talk about some things that last time we were on the show, and we talked about General Electric. Now, I know that you were on the show before they made the big splash in the market. Spinning off certain divisions here and stuff. Was that something you kind of had on your radar, or was that a little bit of a surprise to you?
That wasn't a surprise at all, Joel. I actually wrote an article prodding General Electric to accelerate the disposal of GE Capital segments. I think it was a great move. I wrote an article after the news came out detailing what I thought about it. I think it's going to be great for shareholders. It really turns GE into a dividend growth story, Joel, by reducing the share count by approximately 20%. The $50 billion that they're going to net from sales of GE Capital, they're going to use that to repurchase shares. So I think it's a great opportunity. They still have some near-term issues right now. They're sparring with the EU over the Alton acquisition. So there's still an opportunity for people to pick up shares. I'm actually long GE right now.
When the actual move came out, my partner on the show, Dennis, who's also a shareholder in GE, thought about, well, why not do a $5 special dividend? And at the time, the stock was at $26, went to $27. I mean, you saw what happened to Costco when they did that. Really generated some interest. Maybe it'd be trading at 31, 32 if they would have done that. What's your take on what they did as opposed to instituting a special $5? Because equivalent in cash is something they could have done.
I agree. I think that at this point in time, it's a better use of the proceeds to reduce the share count. It goes towards the long term. And what it does is it allows General Electric to increase the dividend in the future with not as much pain with the cash out. With the lower share count, they can raise the dividend easier because it's going to cost them less.
Great point. Great point. I hope Dennis was listening on that one. Okay, moving on. Another one of your picks. I can't remember when we had you on last year. ExxonMobil, I'm sure, was getting pummeled along with the crude oil market. Finally found some footing in the $82 handle. Ran into problems in a nice round number like 90. Now pulling back again here. What's your take on ExxonMobil?
ExxonMobil, I like ExxonMobil. Last time we talked, it was at 84, and oil, I think, was at 45 when we were talking last. So oil's gone up significantly since last time we talked. We talked in March 17th last time. And ExxonMobil has stayed, in that range bound between 84 to 90. 90 seems like the ceiling. 84 seems like the bottom, but I think that the current situation with oil is more of a geopolitical premium on it right now, rather than having to do with the supply demand imbalance. I think it seems like the oil dip in oil has not slowed down the macroeconomic situation here in South Texas whatsoever. I've read a lot of stuff about the Eagle Ford Shale. Production is going to fall off significantly in June. But to tell you the truth, Joel, there has been no slowdown whatsoever in Texas right now. The real estate market is red hot.
Okay, that's interesting to note that. Let's just go strictly to the crude oil market here. When you're on the show, did make that low at the $45. Has sprinted over $62. I believe 62 and change is the high of the recent move. The recent high close has been 60.93. It's just a little counter trend move in an overall bear market, or do you think this rally has some more legs to it?
I think it's topped out for now. I think oil is going to start trending back down again. There's been, with uh, Saudi Arabia doing the bombing missions on Yemen and the situation with Iran and on the Straits of Hormuz has has really been what I think has spiked oil up. And I think those tensions are going to diminish. I don't think much is going to come out of that. I think oil's going to start trending back down again.
Okay, what about natural gas?
Natural gas is, it's had a little bit of it's been in the dumps for quite a while. It's had a little bit of a run lately. I think natural gas is going to remain in the area that it's at right now. My natural gas play is Kinder Morgan, the pipeline company, is the way that I would play natural gas. I think they they aren't. The stock Kinder Morgan isn't exposed that much to crude oil, but they're a big play on natural gas. Natural gas is going to be the in the coming decades the fuel of choice for power plants, and I think that if you want to get involved with natural gas, you should get involved through the pipelines, and that would be Kinder Morgan. I'm also long Kinder Morgan.
What's the symbol on that one?
KMI.
Okay. I was struggling with that one. So, okay. All right, we'll take a look at that one. Uh, Also, I just want to talk to you about another stock in natural gas play, Chesapeake Energy. That really, I mean, some of these oil and gas stocks have responded to the rally. Why do you think Chesapeake Energy has it?
Well, Chesapeake Energy has been a stock I've followed since 2010. Um, it's been through a lot. Their assets um, are in question. They're heavily leveraged, and so I think that's holding him. I heard the earlier guest talk about Chesapeake Energy being a proxy of natural gas, and I agree with that somewhat. But they've got some baggage. Joel is what the problem is with Chesapeake Energy, and they've got a little bit of a credibility issue. So I think that's going to be weighing Chesapeake Energy down. I don't see them going anywhere anytime soon.
Dave, what else have you been writing about lately? You're one of the top rated financial bloggers on tip ranks and on the internet. So I'd love to see what else you've been researching, what else you've been writing about, what's on your radar.
What's on my radar is, the last few years we haven't seen the sell in May and go away scenario play out. And right now I'm thinking more in macro perspective. I think we're going to see that this year, and so I'm very cautious on everything. The any type of speculative plays I've pulled out of, and I think it's time to kind of hunker down and just uh, take a wait and see approach and see what happens in the June Fed meeting before making any major decisions or opening any new positions. The market seems we're flat for the year. We're at the all-time highs. We keep bumping up against 2100, and I'm biased to the downside. I think we're going to see the correction that everyone's been talking about for the last couple of years. I think it might finally come to fruition this summer.
Okay. All right. Moving on here. What should investors do if you see that kind of correction? I mean, the long-term strategy has always been buy and hold, and hedging or market timing is not really an efficient strategy. I mean, it's hard to give individual advice to people. Everyone has a different makeup in their portfolio and whatnot. But what are you doing, or what would you advise the average investor to do?
I would stick with the low beta plays. The ones that I'm in. General Electric, Kinder Morgan. Um, my speculative play is Bank of America. We didn't talk about that
Let's talk
yet.
about
Bank
it.
of
Let's
America.
talk about it.
Yeah, Bank of America is up about 8% since I suggested to buy it in back in March, and I talked about how this year was going to be the year that people would be surprised with the profitability of Bank of America. And Bank of America posted their first profitable quarter last quarter. So I think Bank of America is set up to go higher. Citi Group is also, I consider, in that category. They have a lot of leverage with the interest rates going up is starting to steepen with the 30-year versus the 10, and so Bank of America, Citibank, those are two more speculative stocks that I would definitely be layering in over the next 6 months.
Okay. All right. So no downside protection, huh? Just kind of let it ride, and the market will eventually come back. Is that pretty much your philosophy?
Yeah, if I downside protection, I might buy some of the VIX, the VXX. I do that occasionally when I want to put some protection on, but I don't hold that for a long term.
Okay. All right. We've been on the line with David Alton Clark. He's a financial blogger following all the markets, but especially the oil and gas market. David, thanks for coming on. We've enjoyed your input, and we hope to talk to you again soon.
Okay, thanks a lot, Joe and Brianna.